Good morning, good morning, good morning. Welcome back, everyone. Today we are going to do something special. I am actually going to start with a fresh chart and show you exactly how I'm using my indicators and what indicators I'm using so you can follow along. I'm actually going to start this chart off on a daily so we can see a little bit more. Actually, let's go right to a weekly. Let's go to a weekly. We're using BitMEX for this because Bybit was lagging so much, so I don't want to risk having to repeat myself like multiple times. So we're going to go with BitMEX for now, and it's just for the sake of seeing the indicators, okay? So this is the naked chart. All we have right now is the volume, okay, which is right here. And now what I'm going to do is I'm going to set up the rest of the stuff that I want. So I want my MACD. I want my RSI. I want my EMAs. Let's do it this way. 1, 2. Oh. We got 1, 2, 3. I need one more. I'll probably need another, but as of right now, let's just start with that. I need one simple. Actually, you know what? We'll just leave it like that. We'll leave it like that. We'll keep our 4 EMAs. We got our RSI. We got our MACD. And then let's leave it at that and then start setting these up. So I'm gonna make one of them red, and I'm gonna leave that as the 9. And I like to just make my line stick because I'm blind. So now there's our 9 moving average, EMA, sorry, our 9 EMA moving average for this one. And then feel free to adjust it accordingly to your own preference. I'm just doing it my own way so I can show you guys visually. So here's our 21 EMA. And I'll go with the 55. And then I am gonna need another EMA. Yeah, you could get an EMA ribbon, but I don't know if that's a paid indicator or not. So everything I'm gonna do is free. I don't want to make anyone have to pay if you're trying to learn. Learning should be free. That's the 200, and then missing one. That's my 100. And we'll make this thing orange just for that. So now on the chart, we have our MACD right here. We have our RSI, and we have our EMAs, the 9 EMA, a 21 EMA, a 55 EMA. Is this a 100 or 200? This is a 200 EMA, and this is the 100 EMA. It's just not in order, but it's all there. So I'm gonna hide this now, okay? And then what I'm gonna do is I'm gonna take the RSI and I'm gonna actually impose it onto the MACD. You just drag it on, now you have it all right there like that, you see? I like to look at it like this. Now, keep in mind we're on a weekly time frame, guys. And I just wanna point out a quick few things that I noticed already. So on the weekly time frame, we bounced off the 55, then we lost it, bounced off the 100, then we put in a loss again because the 21 EMA didn't let us have open and closes above it. We rejected right after. And now we're bouncing off the 200, okay? Now another thing I want you to point out is, look over here when we lost this 9 moving average and this 21 moving average, the cross of the MACD occurred to give you the heads up that it's gonna happen. And then we crossed down on the MACD, and then this time when we were supposed to go up on this rally, we actually did not cross back. It was a failed cross, and then you saw this epic sell-off. You see this? And then this is where that happened. And you can see it right here. The MACD started to exponentially increase to the downside as the sell-off increased. Now, these are lagging indicators, so they'll never tell you the move's about to happen. But with a little bit of practice, you could have saw that over here. When you saw this rally come to the upside, if that did not cross above and you crossed above the 9, you knew that this was a false rally on probably some low volume or whatever the situation was. Maybe it was a weekend. And then since that cross never happened and we were above the 9, when we did lose the 9 again, this was a confirmed area to short, and that's why people shorted heavily with a stop above. Okay, now you can see we have consolidated on this 55, and then what happened again on this 55, we had this rally to the upside, right? But MACD was also showing you, hey, the move to the upside is coming, but the cross happened right around here, right? When the move already is like 90% done. That's totally understandable. That's what I meant by lagging indicator. But then when it bounced on the 21, you had confirmation that, hey, this is an area that you want to maybe long, because see, the cross occurred down, was shallow, and now it's trying to break back up. And that's when you got into this rally. Yes, you missed this rally, okay? But if you were looking for the MACD cross, you missed this rally. But if you were looking to take the long off the 55 with a stop under it, you did get into this rally. It just mattered how you managed your risk over here. If you took that long and then you took a stop loss under these previous wicks, you're in this rally and you would have been taking your profit on the 21 or above the 21, and you would start cutting your position after the 9 was lost and then the 21 for sure. And then you look for your re-entry. This was your re-entry. The MACD never crossed to the downside. It actually gave you a fake out, thinking people thought that we were going to crash back down because this was making lower highs. But what happened was all we did was reset on the 21, the momentum and the indicators, and we rallied right back up. So all the indicators reset over here, and then we rallied right back up. And then this rally, on the second time, we were hitting the outer bands to the extremes. And that's why we saw some resistance. Sorry, it was also the previous high. And once that resistance was taken out, then we basically went to the downside and made that cross over here on the MACD for that downward movement. And then the MACD and the RSI confirmed it due to the fact that this huge sell-off that happened over here, as well as on the MACD, you can see. This looked like that it was a reversal, but the MACD never crossed to the upside. So this whole area that was here, I was just like, hey, this is consolidation. And then look, right over here, we got our attempt to the upside, and then it rejected right back under the MACD again. So this whole move down was telecasted through MACD, showing you the momentum to the downside is continuing. Now we're waning, okay? After the EMA of the 200 was tested, we did not make a new low under these wicks. It's showing you, hey, now the potential to the upside is there. What we would want to see is this MACD cross up. Yes, we can take a long here with a stop under this 200 if we want to play it out like this scenario here. But I'm just letting you know, one indicator is telling you, hey, this is a potential bottom long term on a weekly time frame. Second indicator is telling you this last week we had a relief rally. Will this relief rally continue into next week like it's done before? You know, usually when the MACD likes to switch, it sticks to that area. You have a fake out here or there, but more than likely it's gonna rally to the upside. Another way I can tell you this is, look, we had a rally to the upside and then another rally, but that rally was not that much stronger than this one, and it actually set up a bear divergence due to the fact that it made a much higher high, and this was not that much of a higher high. But this is your RSI. It's actually showing you that the RSI was there, the strength was there on the RSI. But that's one way to see. Over here you can see we are having one attempt to the downside with very, very strong move to the downside, and now we went up, and now we're attempting our second move to the downside. Now, just so you know, this downside and this downside momentum is weaker, but we're making new lows. So this would be considered a bullish divergence, in my opinion. That would be my third point of confluence to say, hey, the bottom is very close to being in. First being the 200 being tested, holding as support. Second, MACD confirming the momentum to the downside is waning on a weekly time frame. We have a volume. We are curving back to the up. Now this next week that opens will be the one to say, hey, we're going up. If we don't get the movement to the upside, and it's one of these fake outs, right? Then we're gonna tap into it and then roll right back down, and this one light red candle will be followed by another heavier red candle sell-off, aka right here. See that? So this was the dead cat bounce. We had 3 weeks of upside, and then we rejected right off the 21, and then had a hard rejection, and then 55 saved us. So right now, what we're doing is we're basically we're retracing off the 200 to the upside. We are going and rejecting off of this first 9 EMA, but I'm looking for a little bit higher into this 21 EMA, around 37,700, for the real rally to be rejected. So we might have 1 or 2 more weeks of upside. So this week was the first week to show, hey, we closed inside the Bollinger Band on Bitcoin. Ethereum is outside the Bollinger Band, but Bitcoin is inside the Bollinger Band. So we can continue upwards next whole week and retest this high at around 32,250. And then if we poke into that area and then get rejected, that's the clear-cut sign that we're going down. Now, that's one thing to show you, hey, the upside potential is there. Second thing I want to point out is your EMAs. 21 EMA is lost to 55. So now we are basically going to the downside. The move to the downside is prevalent. You have your 100 EMA here. The 9 EMA is under. So this is a little bit of a bearish stance. And even if price gets up here, look, we're wicking down, right? So this wick here is showing you strong pressure to the downside off of this 9 EMA, which is under the 100 EMA. This 200 EMA is our last layer of support with the EMAs until huge trending action to the downside will begin. So if this price action this week doesn't get above this 9 EMA around 33,800, we're going to be looking for that rolling down effect to occur. This 21 EMA will lose this 100. We're going to see all these EMAs get under the 100, and all the pressure will stack on the 200. And what I'm saying by that is you will have a consolidation like this, a triangle consolidation. I don't expect these highs to get breached, but yeah, we might wick it, and we get out. But until we get out of this triangle and start making new higher highs on a weekly, higher highs and higher lows, I'm not looking for upside. So I'm looking for this curving action in price demonstrated with wicks. Okay, so that's the first thing that we need to see to show, hey, upside is coming. Right now, this bear flag consolidation to the downside, if we do break it to the downside under that 200, we're looking for a move like this. I'm going to leave all this here, and I'll try to share the chart in the video, in the post. But yeah, this is the kind of situation we're looking at. Either we're going to break down, which makes sense if the 200 is not supporting us, we're going to break down, or we're going to try to break up and take out this 21 EMA from here. So you have your two possible paths of price, and I'm going to make these thick so they're not the scribble TA, but this is the measured move, what we're expecting if the price breaks out of this triangle in that fashion. Out of this triangle. Okay, so that is what we're looking for on Bitcoin. We will find out this week how price wants to act. If the markets are bullish, that's great. Let us go up, But we have this clear resistance at 33,900, I want to say. And then our next layer of resistance is around 35,000, 36,000. So we have a little bit to go. Another thing I will do is I'll add one more indicator, my favorite, which is a Fibonacci retracement. Now, just so you know, this is our previous high, and then this is our low. This is what we're looking at right now. And I have not set my custom fibs on this since we're doing this all naked. But this is what I'm looking for, okay? If we lose this 25,294 to the bottom, one second, guys, let me make this to the right. There you go. Okay, so once again, if we lose this price to the bottom, 25,294 with 4-hour opening closes, I'm expecting the downward move to come really quick. If we can't get above 30,600 with 4-hour open and closes, just consider this triangle consolidation to fill out. Even if we get above 30,600, we have to get above this 33,990 area for this upward move to actually play out, because this trend line, this dotted line, is the trend line to break, to get this upside momentum. The same thing I did with this triangle consolidation. This is what this little dotted dash line is doing, and this is our base. So I'm not drawing it because I don't need to, but I'm gonna do it for you guys. You see this little line right here? This is our base. That's what I'm demonstrating with this fib, okay? This triangle consolidation. So price can bounce around in here all at once. It does not matter to me, because this 21 EMA and this trend line and then this upside resistance is all one point. It's all that confluence is there. So it's not like we need to have it and look at it. I know it's there because the 21 EMA is going to actually be the one that's guiding the price to the downside every time it goes up. And then the 100 EMA is the first real resistance before the 21 EMA. The 100 EMA is a larger EMA, and it's already showing you bearish stance due to the 9 EMA being under it. At 21 EMA is about to follow it. The 55 will follow it. When all these EMAs come down because we lost this 200, they will have a chance to bounce off the 200. But if those EMAs cross under the 200 as well, you will see new lows, and it is going to be an ugly situation. I'm looking around 19,000 to 20,000, around there, as my first area of interest. And I'm just going to put this here just so we can look for that area if it comes. And that's where I'm looking for a nice little bounce in there and around here. So between those two lines, I'm expecting some consolidation under the 200. And look, after I make those lines, look at this. Our measured move is basically coming to our first area. And I expect the first attempt to give a bounce, and then we might roll over and then consolidate, and then. So all this off of a weekly chart. Okay, guys? This is what I'm looking at. Once we do break above 48,000 with a weekly open and close above here, and this high is taken out, my next expected move is 62,124. And then I don't want to get anyone too excited, but once we get out of those levels, once this bull flag, this huge bull flag consolidation, once this thing finishes, we can look for much, much higher. I know I did the fib, I did this triangle consolidation. Another thing you can do is parallel channel. And the way I would have drawn it is around like this, and this, and this is another point of confluence to show you, hey, when we do break down, you have this middle of this channel to give you a bounce, and then under that you have your gold things. And then if we lose this area, the next level of bounce is going to be, you know, on this somehow channel. I'm going to remove the background. There you go, so we can see it a little bit cleaner. And then I will make this red, keeps me a little bit thicker so it's more visually, like, you can see it. Another thing I'm going to do, guys, is I know I drew this little triangle consolidation out. If you watch this video, you understand what I'm talking about. I'm going to delete this. I'm going to delete my little scribbles because everyone hates how bad of an artist I am. But I just want you guys to be able to see this all very, very clearly. And I'll try to leave this chart the way it is if BitMEX doesn't erase it, because I'm not logged into any of these things. So that way we can come back and just, you know, if we're right or wrong, we'll be able to see the video, and we'll have this chart as a reference guide as well. So that is my way of doing TA on Bitcoin, guys. I hope that was helpful. If you guys have any questions or concerns, please feel free to ask. Just the reason why I'm showing you this on a weekly is because the potential for the upside move is there. But as of right now, on a weekly time frame, we've never had these EMAs cross in this fashion. So I'm being very, very cautious. Like the last time we had something like that was all the way over here and we tapped the 200, right? And then we bounced off. Well, we're tapping the 200 right now. Are we gonna bounce out? We gotta see. It's gonna might take another week or two of this grinding this 200 EMA. The only reason I'm hesitant is because all the other EMAs are in a bearish stance. So we need a big, big pump up to start curving all these EMAs to the upside. And then when that does happen, you will see a huge move to the upside. It should be a big, epic short squeeze. But I do expect a few weeks of sideways consolidation into this area and, you know, maybe a grind down before this upward move. So, and even if we go to the top side, I'm expecting my first level of resistance being like this 382. Is that the 382? Yeah, 382 around 33,989. So, all right, guys. Well, that's your weekly analysis. I've already told you guys the magic numbers for today on Ethereum and Bitcoin, and I'm going to repeat that for you. On Bitcoin, we need to close above 28,250 today at 8 p.m. Otherwise, it's going to be a problem. And then Ethereum needs to close above 1750 this 8 o'clock today. Otherwise, it's going to be a problem. And that's my analysis for this weekend, guys. If you have any questions or concerns, please feel free to leave it in the section below. If you have any other assets you would like me to cover, please leave it in the section below as well. And aside from that, guys, please trade safely. This weekend is gearing up to hurt some people, it looks like. So do not assume the bottom is in, and just be very, very cautious. If you do take the play off the 200, please use low margin and have your risk ready. Any price under the previous low, I'm expecting a washout move to the downside. So get ready. And please don't forget to like and subscribe and press the bell button for notification, guys. That way I get this stuff to you ASAP. And aside from that, don't forget, no matter what happens, win or lose, I will always love you. So if you need anything from me, just give me a holler. I will always be there. And if you can't get me in the video comments and you want to talk to me immediately, go to the description of this video. The Discord group is there. It's free. Reach out to me, ping me. I will get back to you ASAP. Okay? Be safe, guys. It's been great talking to you. Talk to you guys soon. Let's get ready for that weekly candle close, and I'll see you guys Monday morning before work as usual. Bye-bye.